Both TCS and Infosys have reported strong profit growth for the second quarter of this year. But how do the two tech giants fare on some of the key operational parameters? Agam Vakil, as he does almost every quarter, is standing by with a scorecard and a relative comparison. Agam, good morning.
Good morning, Neeraj. Well, you've already mentioned that both the companies have had a good quarter, and this is largely on account of the large deal wins that the companies have signed in the latter half of the previous financial year. That is starting to pick up and show up in the revenues for in both cases. So what does it mean when it comes to this specific quarter for both TCS and Infosys? Well, as you can see, while both have had a reasonable growth, and in constant currency terms, near 4%, over 4% for Infosys. Infosys actually, its revenues are ahead of expectations, and which is why in this case, I'm going to give the score to Infosys. So for now, it's Infosys 1, TCS, nil. Moving on to the next variable, and that's margins. Perhaps this one was in focus a little more on account of the depreciation in the rupee against the dollar. Now, that was expected to show up as a benefit for the entire IT sector, and that has for TCS, as you can see, an expansion of 150 basis points. Putting TCS back into its guided or targeted range of 26 to 28%, and that's a big positive for TCS. Infosys, on the other hand, well, we've seen margins remain flat, surprisingly, and we will talk about this in a little more detail a little later. But for now, TCS is the clear winner here. So, well, it's 1 for TCS and 1 for Infosys. Let's move on and talk about the next factor. The financial services vertical, this is the biggest vertical for both these companies, considering a third of revenues come from this specific vertical. And as you can see, TCS has seen, well, a 3.5% growth on a constant currency term basis. Infosys at around 5.8%. Do remember that TCS had a substantially strong quarter in the previous one, but this time around Infosys pips TCS, and which is why I'm giving the score to Infosys in this case. Hence, Infosys takes the lead with 2-1 against TCS. Moving on, it's the same for the North American geography, and again, 2/3 of revenues for Infosys come from North America, but well over half of the revenues come for TCS from North America, and yet, as you can see, Infosys, well, once again beating TCS when it comes to revenues from this particular geographic region, and well, Infosys scores another goal here, which means that it's leading 3-1 against TCS. Finally, let's come down to digital contribution. This is fairly even, and while one may argue that the growth for TCS on a year-on-year basis when it comes to digital services is 60% as compared to 34%. Well, if you consider the contribution, it is largely around 30%, and this can change, considering both these companies are going head-to-head. So I'm going to put this on as a draw for now. But on the whole, as you can see, this is the final score line. So TCS 1, Infosys 3, and Infosys clearly is the winner if you compare it to TCS for this performance in the second quarter, Neeraj.
Well, interesting. But yeah, while it may be a winner, it's lost out to TCS on the margins front. What's caused this?
Right. So, Sajid asked the MD, rather CFO MD Ranganath, how, and what is the reason why margins have remained flat despite the fact that you do have substantial benefits coming from the appreciation of the US dollar against the Indian rupee. And this is the breakup that the CFO has given up. And so the currency benefit does come to around 80 basis points benefit. There are also pricing benefits worth 70 basis points. Hence, the overall benefit should be about 150 basis points, and this should have reflected in the margins, but the margins were flat. And why is that? Let's take a look at where the company took a hit in margins. As you can see, higher variable pay and compensation led to 100 basis points hit, and another 50 basis points due to higher subcontractor costs, and that's the reason why we see margins even out, and they remain flat at around 23.7%. But again, when it comes to its outlook, the management is happy, and they certainly haven't revised their guidance upwards, and they say that, well, it's within in fact, it's at the higher end of the guided margins band, and they're happy with it, and they're gonna wait and watch about as to how the rest of the year pans out. But for now, the margins flat for Infosys.